Why we're paying attention to this? Because on the higher range, price book structure here, right? And then we're expecting price to return into discount of this range before going back up, right? And then what do we see? We see price returns into discount, and then in the process of creating um, lower low, lower highs, lower low, lower highs, lower low, lower highs, lower lows, higher high, right? So this is a change of character. This is another break of structure, which could also um, give us an opportunity to look for entries because price finally broke structure and is within discounts of the higher time frame range, right? This was also a break of structure. So now on this, with this knowledge you have, price is now creating a higher low, right? This would have been your first entries because if you were paying attention to premium and discount of this range, you would know that you should pay attention to this once price comes into this zone, right? So you would have gotten this entry for price to head back up to take out this high. So which means price is bullish, right? But then this happens, price goes back up, and now you see this is a new range, right? But then price never officially moved into premium of this discount of this range, right? So this is still open, right? So we expect price to move into discount before heading back up because this was a break of structure, right? Are you guys understanding what I'm doing? You guys are following up, right? Is everyone following up? Is everyone, hearing me clearly? Are you getting what I'm doing, or is it a bit complicated? Hello, can anyone hear me?
Hello, sir.
Yeah, you could hear me, right? You guys are understanding what I'm doing, right?
Yes, yes.
Okay. So, all right. So let's continue. Okay. So now we see currently price hasn't mitigated discount zone yet. So this is still open. What do we expect? We expect price to create a lower high within this zone before heading back up to create a new higher high. And then officially, probably in the future, clearing out this high because price is now bullish because of this. Okay, we're bullish because of this. But then there was a break of structure here. The same thing we're expecting price to return into premium, which is this zone in general. Okay, so now if this happens, we have this as a break of structure. Let's see what happened right here. On the lower time frame, this would still be a range, right? This is still um, higher high. Sorry, this is still a higher high, lower high, a higher high, lower high, and then higher low. Sorry, higher low. Yeah, a higher high, higher low, higher high, higher low, and down. And then what happens? Price keeps going back up in the same formation without giving a sign of a break of structure. But then now we had this on the daily time frame. So we see price created a lower low, right? What do we see? Price creates this higher high, higher low, higher high, higher high, low, higher high, higher low, higher high, lower low. So this is a change of character. This is a sign of weakness, which means price could be coming back down into this premium, or probably that discount, or probably within this discount, because this is also a range, right? So we know that this is now a bearish scenario in the market because price just took out this low. And price wasn't supposed to do that because price is not an uptrend. So once that happens, what do? Wait for price to return into premium of this range because we are now bullish, right? And let's see if that happened, the price will turn into premium. So, this is not an official high, right? Because this never mitigated premium. This is still the range. Okay, this is still the range. So we're expecting price to return into premium of this range before creating a new lower low. Okay, so now you see what happened. Price returned and created, a higher low. Now it's heading back down to create a new lower low. So if we were paying attention to structure, we would have had this as our entry, right? Probably if we had followed this structure on the lower time frame, we would have had this as an entry, right? And then price would have been going back down to create a new lower low, which is TP, right? So now this for the same POI which I used to mark out the Y curve, the ICT and all. Now I just did that in general to explain one particular thing, but then I needed it to be a particular section where I could boldly show you guys what I'm trying to say and not just say it, you know, in words. I just did the practical section of it, and now I'm just going to break it down in words so you understand. So now this is something a lot of people don't see as an important part of trading because it sounds very basic, very simple, but then it's the most important part. Sorry, is the most important part of trading, and then the most significant part of trading, which everyone is supposed to pay attention to. But then a lot of gurus, and then these guys who wants to sell their package like their ebooks and videos on YouTube, all they do is they make this stuff a little complicated by using structure. All they do secretly is follow structure. But then to make it sound fancy and then draw your attention into something else, they build up a new name or probably say something fancy or draw something fancy on the chat to make you understand or think it's all complicated. Let me give you an example of what I'm saying. The phantom cost, for example, I'm an SMC trader, right? So I'm not criticizing anyone right here. I'm just giving an example. You could see the first course came out, the second course came out, the third course came out, and practically they're all preaching the same thing. But then they're all pointing at different methodology. And then Phantom itself could point out this as a POI using both Phantom 1, 2, 3, 4, 5, and 6 as a different kind of, reasons why he picked out this POI. But secretly, all he'd spotted with his eyes, probably without signing them out, because if he had pointed this as higher highs, higher lows, higher highs, break of structure, higher low, and then a lower low, probably no one would have given him attention to understand what he was doing, right? This sounds very simple and easy, right? But then that's how easy trading is once you follow the right thing. Okay, all you have to do is understand that structure is key, and basically all the time structure is going to be key and would ever be forever be key. And your strategy is only going to work once you follow structure. Now let me show you an example. Let me build up a storyline using something different. I'm going to show you something different. Let me say I wanted to build um, a strategy, right? A system. I want to sell an ebook, get people attention. I could say this was let me use something else, something new. Um let's say call a name. Let's find a fancy name. Let me say the Japanese line, right? The Japanese trend line. So price finally tapped into the Japanese trend line, tapped into this supply zone, right? So let me call this JPT. JPT. Okay, and then right, and then I call this supply. Let me show you how these guys fool us all the time using one method and then calling it multiple names. Supply, right? So let me just make that a little bit easy to be seen. Right? So this was supply, and then this was the JPT, right? And then I do the same thing over here again and say this was, let's say JPT 2.0, JPT 2.0, right? And then the JPT is testing this one. And then once this tests this, and then you see it's happening close as to a resistance, price is going to sell. And then you're going to take this as an entry, and then let's say this as a stop loss, and then target this lows, because this lows, let's say this is also a reverse JPT trend line. Okay, and as long as this is broken, this is going to fall, and then this happens. Boom. And then I snap this, take a screenshot of this and send it into a group. Or let's say I have over 10,000 to 20,000 or 30,000 followers on YouTube, and then I do this and then send it out to YouTube. And then a lot of people get curious, what's the meaning of JPT? Why did this work and all, and forget that all this was based off structure. You see how important structure is? Now, this got you all fooled and got your attention and played you all when you never understood the basic of trading in the first place. You forgot the basic rules of trading because you saw JPT. So you get my point of what I'm trying to say. You see, this is the only reason why every method is easy and simple to me. Now, once I see this chart, let's say a typical me on a normal day is seeing this happening. All I pay attention to is this. I try to filter out all this and then see this. Once I'm looking at this, I'm not looking at this trend line or what the fuck JPT means. All I'm paying attention to is why is he calling a break of structure a JPT, blah blah blah. No, you see, so all this is just being manipulated and just used to sell out books. So once you get distracted from what you're supposed to be paying attention to, which is structure, you don't find anything valuable. Okay, you can never be profitable because you get curious and then find everything complicated to understand. That way you would never be profitable because you keep changing your methods over and over again when you don't understand psychology of trading and mindset of trading. We're going to be going over that tomorrow, which is the psychology and mindset of a trader. Okay, once we go over that, I guess a lot of these manipulations being done by the gurus and those who have the opportunity, or the public figures, once these manipulations are being fitted out of your brain with the psychology and all, you will be able to understand why you shouldn't be paying attention to this trend line. Instead, you're paying attention to structure. Okay, so now go back to your charts once we're done with this section, and look at the chart over again, and you would see that the only reason why your chart never hold was because of this structure. An uptrend structure is like this, right? Price is fragile. Price would never move in a straight line, right? It's always in a zigzag form. But then, if price wants to go back down, it has to give a sign. And if price is going back down, the next thing that would happen would be price within a higher low to create a lower low, right? If price is doing this is the only reversal which you're going to be seeing once price wants to go back down. It's always going to be doing this over and over again. This is what price does. And if it fails to take out this low, price and creates a higher high, price will do this, then go back up. This is basically what trading does. This is what trading does over and over again. And then the stop ons and manipulation and all is being done by the books, and then probably the gurus to get you all confused. This same stuff could be seen as uh, a liquidity stop out, and then also be seen as a break of structure, right? And then also be seen as a test by an order block. This same stuff could also be seen as a selling climax. This as an AR. This as ST, this spring, and this as a test. You see, this same stuff could also be seen in um, Elliott wave as probably the one, two, three, 4, 5. Okay, and then this would be seen as an A, B, C. You see what I'm trying to say? You're just being, fooled over and over and over again. When basically what you should be paying attention to is structure. You see how structure is always key. You're never going to fail once you're paying attention to structure. Trading never changes. Right? Trading is always the same. These guys do what they do over and over again. What they just have to do is just make you confused and then play with your mindset. Once your mindset is being tampered with, you feel like your strategy is no longer working. Whichever method you're using, whichever ideology you're using, whichever system of trading you're using, if it's based off structure, I'm going to tell you 100% is going to work. Okay, and at the same time, a resistance trader will see this as a resistance. You see this? Look at how this all makes sense, even without me, pointing out anything significant right here. You just see all this happening. See what I'm trying to say? A resistance trader could see this as a resistance, and then see this as a break, you know, a break of resist support. Sorry, support. I don't, support. Yeah, see this as a break of support, and see this as a test of support, and then take a trade of this. Same time, you could see this is all what they do. This is still representing um, Elliott wave. You see, 3, 4, and 5. Then what you see right here is basketed like A, B, C. Now ABC 1 to 3. The whole thing repeats itself over and over again. This guy is calling structure all a fancy name. Okay, so whatever it is you think you know, if it's not following structure, it's bullshit. It's not going to work. Now, same time, this was also probably an accumulation. This was the manipulation, retest, break of structure. You see, whichever method I'm using, whichever system of trading I'm using, this is also manipulation, right? Manipulation, accumulation, sorry, accumulation, manipulation, and then this was the distribution, right? Nobody's going to teach you this. A phantom trader would never teach you this because if he teaches you this, he just showed you the secret to understanding trading. So why would you want to pay attention when he says this is liquidity and then this is BR and this is that and this is this? Why would you want to pay attention to that and want to take his course when you know that all he just pointed out is just structure? So you see, all these methods are being built of structure. I respect ICT a lot, but still, ICT is still going to follow structure because structure is key. It's still a fair value gap being tested, and it's all structure. Okay, so if you understand trading, you should understand that the first thing you should be paying attention to is structure. All right. Now, this doesn't mean structure can't be manipulated, but no matter how structure is being manipulated, a high will never be broken if price wants to go back down. If that high is broken, that's because of liquidity. Now, this is where liquidity comes in. You see, I just took out my time to explain structure to you. So if you still don't understand structure, there would be no way you would understand liquidity. Okay, if you don't understand which high is going to hold, because if you know structure, you would know which high is going to hold and which high is not. Because if you understand structure, you would know that this is a strong high, this is a strong low, sorry, and this is a weak high because the price is currently bullish, right? And then that goes for that, and you see this is a higher strong high because it broke this low. So this is a weak low and this is a strong high. So price can't break this because if price do break this, price is going bullish. So what does price do? Reverses and takes out the weak low. Why is this a weak low? because it's against the current trend, because trend is currently bearish. So you see, whichever high or low is being cleared out is because it's following market structure, right? If you think price is going to be reversing from this high, and price doesn't, and clears out these highs, but never clears out this, then reverses back down, then there's a logic explanation why this never hold, which comes to liquidity. Okay, so once you understand structure, next on the list has to be liquidity. All right. So now structure is basically the most important thing and the father of trading in general. So if you're going to be doing trading, no matter what it is, forex trading, crypto trading, whichever trading you want to do, you have to understand that structure is key. And first of all, you have to understand structure. Okay. So that's the breakdown which I wanted to do on structure. And probably tomorrow would be my section. I'll be doing liquidity and then probably confluence trading. But in general, I just broke down what I probably practically do when it comes to trading in general. So if you're paying attention, if you have been paying attention and you have been taking notes, let me just make this simple and then repeat what I said and then write it all out for you so you understand. Okay. First of all, when trading, I said the most important things which I mentioned during my section were one, structure is always key. Okay, so structure should be the first attention when looking for a POI, an entry, or whatever whichever it is. Structure has to be key. You have to understand where the strong highs are and where the weak lows are, and where did price break structure recently, and where is price heading. So structure is basically the first thing you should pay attention to when trading. Secondly, you have to understand liquidity. Okay, where is the liquidity? This was liquidity for this PO. This right here was liquidity for this POI right here, which is the only reason why this hold. It was because of liquidity. Okay, so liquidity is also as important, but structure is more important than liquidity. If you would be asking that question, structure is always important than liquidity. So now, but if structure is going to be going back down, liquidity will let you know if that is going to be possible or not. So structure is also as important as liquidity. So you have to understand that liquidity is everywhere in the market, okay? But only structure would let you understand the direction it's heading. If you're confused, let me say that again. Structure and liquidity works together because structure lets you understand which direction of liquidity the market is going to be heading to clear out next. Okay, structure is the direction of the market, while liquidity drives the market. The market basically hunts for liquidity. Okay, so market is after these lows. Structure is going to tell you if price is going to be grabbing this low next or not. Currently, you see structure never broke this high. Either the structure broke this high, either structure broke this and is going back down. So if a new higher low is being created right here, means structure will be heading back next to clear out this liquidity. So structure lets you understand which direction price will be heading to clear out next. And now this has been cleared out, and you understand price will be heading back into premium, right? So within premium, where is the internal range liquidity, which is something we're going to also be treating within this webinar, okay? So now you understand that this is liquidity, which is being fed into this POI. And then you would expect price to return back into premium, clear out the liquidity, and then head back down, okay? And if price doesn't go back down, price has broken structure, right? That's how it works. That's how structure works in general. Okay. Now, how do you know where price is heading back next? Now, let me show you something very important back here. Let me go back to this and then show you how price went back up. Price came back up, cleared out these highs, right? And a lot of you might be wondering why did that happen when this clearly was the high that broke this low, right? Now, let me show you something on the higher time frame, which is the monthly. Now, on the monthly time frame, this was clearly a POI, right? Which is the supply zone. Then price came into this, creating a higher high, a lower high, right? Higher high, right? Since price created this new higher low, sorry, since price created this new higher low, price hasn't created a new lower low yet, right? And then price took out this low, yes, which was right, but on this other structure which we have here, okay, so where is the premium and discount of this range which you're expecting price to retrace back into? Do you understand what I'm trying to say? Now, this was a hidden order block, which I would also explain within the seminar. And then you see this as this low was liquidity, which was created, right? Let me go back a little bit again. Let's say this. Now, on the monthly, you see price was bearish. Price just became bearish, right? So you expect you understand the price is going bearish. And let's say you had an entry from here, and then you are expecting price to retrace back down into premium of this range, right? Because you see this as liquidity for this POI, right? But then at the same time, price would also respect structure and give into the liquidity which we have currently in front of us. Now, since you understand that this is a range at the first place, which broke structure, right? And then we have liquidity just resting below these lows, relative equal lows, and then resistance which is within those zone. You see, so this was retail resistance too, right? So let's say you already had an entry from here. Let me delete this, and then this was liquidity, right? So which is the closest POI to this liquidity which was listed? That would be this hidden order block right here. And now, you all, if you don't understand how to trade from a hidden order block, I will try my best to explain that, and hopefully you understand that. But then I do have a video explaining this particular stuff basically on my YouTube channel, so you could go check that out on your free time and then try to understand what a hidden order block is. Okay, so now this has mitigated the opening of a hidden order block, but the basic concept of a hidden order block is that it has two POIs, one at the opening and the other at the 50%. So once the opening has been mitigated, price will be headed to mitigate that at the 50%. But an obvious order block has only one POI, which is the order block, which was this. Okay. Now this week order block has two POIs within it, which is one at the 50% and one at the opening, which I guess this would have been mitigated, and price, if price should return back to this high, it would be going into this. Okay. So now, with this concept and understanding that this was a hidden order block and it has two POIs within it, and you see clearly this has been mitigated, so price has to be returning back into the 50%. And this 50% right here mitigated the opening of this order block, right? So this also has a 50% POI, which is still left back in here. So this also will serve as inducement for this POI right here. You would see, even if I should play this tool and price, you have to understand something, that these are all counter trades, right? You're playing structure, using liquidity and other blocks. Now is a little bit advanced from what I was saying earlier, right? And it might be complicated to you. Not to worry. By the end of the 3 days webinar, you should understand all this. And then, but your overall bias is that you're expecting price to return back into this demand, which is within discount of the overall range, right? Now, what do you see? You see price goes back down. You see this? Respects this hidden order block. Now, we know this is a bearish market, right? We're expecting price to take out all this, you know, together. But then we expect price to move in a rangey form, because price is always going to move in that form. So now, since you understand that this was a POI, where is the current POI coming from next? Clearly, you could see we have a hidden order block right here, right, which is still open to the fullest. At the same time, on the monthly time frame, we have, you see, it's just within this hidden order block right here, and this would serve as inducement to it, right? What does price do? Okay, so let me go back to the weekly. You would see that. So price reacted from this within the block within this. You see? So price mitigated this, but then this would still be my original POI because all these are relative equal highs. So we don't trade from this because you can see clearly these are relative equal highs. So I would not pay attention to that. I wouldn't lie. If I was in that trade, that wouldn't have been my POI. My POI would still be the original hidden order block above. But then this is the weekly, so anything could happen, right? But you see, this gave a reaction, and because this was a downtrend, price only cleared out the liquidity within this, and then it's going back down. Now you know this is a weak low, right? Because why did I call this a weak low? It's against the trend. Our market is on the current line of downtrend. This is a lower low. This is a higher low, right? So price comes back down to this. You know this is going to be cleared out. It's a bearish market, okay? So that's the basic concept of knowing lower low or lower high. Price has to come back down to clear the lows. If it doesn't clear the low, when price is against the trend, you should know that price would be doing the opposite of it, and then price would be going back up. Let's go back a little bit and see what this candle did. Because it was an institutional candle. So you see, price first came into our POI. We don't know how long this happened within the week, but then came down to our original POI and did the mitigation. But then if price had stopped there, that was because price gave a reaction to that. So you see, let me go back to this candle. Okay, so this was a manipulation which mitigated this POI and this POI at the same time. How do you know manipulation? Look at this. You see how this clearly was a manipulation, but the price was not ready to go back down. So this all involves the market maker theory and all of that. That will be explained in a different day, not today. So let's just go back to the basic stuff so you don't get complicated with that. But I just wanted to show you clearly that that was a manipulation. You could see that, right? Price on the daily mitigated our POI, but on the candlesticks came into this. That's to tell you they have no reason to come back down here yet. Price is planning to go back higher, but then that's all based on market maker and all of that. But on basically on structure, you see that this is still a break of structure, right? Which means price is still bearish. Until this high is broken, then you see price as bullish. Okay, this is all structure. No matter the theory you use, no matter the strategy you use, no matter what you see or what you expect from price, price is only going to follow structure. Okay, so now that's all I have to share about structure, and that's my knowledge on structure. Okay, so if you have any complications with that and you have any extra knowledge you want to, any question you want to be clarified on, do go ahead with that before I hand over back to Rena. Okay, does anyone have any question, in particular you would like to ask?
I mean,
Okay,
you
so
can either
this
unmute
webinar,
yourself, or you can just write in your chat. You have two options: just unmute yourself if you have questions, market structure, liquidity, inducement, any stuff. You can ask that.
all
All
right,
right.
since no one has any question.
Good evening.
Okay, okay, yeah, good evening, bro.
All right. So sorry, I just want to say this. It's now related to what we just learned. Please, will this session the recordings be sent before the next class? Because I missed like 1 hour out of the class. So I would appreciate if it can be sent before the next class so that I'll be able to catch up with others. So that's just my plea.
Okay, so
Samuel, we'll try our best to do so. We have some sort of editing to do that, but we'll try to do so. Maybe in few hours you'll receive that. But yeah, we'll try to.
All right. All right. Thank you.
so does anyone have any question? We just had this is the third hour of this section, right? So this section is going to be ending in the next 30 minutes, okay? So if you have any question or anything you want to learn about this, today basically we covered the basic understanding of structure. Okay, so that was the topic of today: basic understanding of structure and liquidity. And then by tomorrow, we'll be walking through mindset and psychology of being a trader. Okay, so why are you trading? What are you doing? Why did you pick trading? Stuff like that. Because if I should ask that question, the a lot of answers would be practically the same thing, which would be I'm trying to be financially free. Nobody would tell me I pick trading because I want to pick trading as my career. I pick trading because I love analysis and I would like to be behind the screen making charts every day. No one is saying I pick trading because I want to get mentally strong, because honestly, this is the best when it comes to building you in trading. Okay, trading is the best to build your psychology. It's the best to make you have to understand the risk management. You get my point? You have to understand how to spend your money, because you don't fund more than you can't lose. So all those stuffs like that apply to our daily life, helps us to understand trading in general. Okay, so we're going to be going through that by tomorrow, and help you understand why you're trading. Because if you don't know why you're trading, you will never find your edge. Okay, if you don't have a drive, if you don't have a reason why you're trading, if you don't have what you're after and why you're doing this in the first place, you won't find your edge. Because trading is not something you mess around with. A lot of people think this is an easy job where you could easily, live a better life, which is needed to make $100 in a day. How do we? Someone asked a question. So he said, "How do we determine the right POI within premium and discount ledger?" All you have to do is understand liquidity. Okay, if you want to understand the legit, the white POI, or which is going to hold, you have to understand liquidity. This is the basic concept of this. Today is just the basic concept of the whole thing. Tomorrow I'll be the one handling it, and I'll take you guys through on how to pick a POI when it comes to premium and discounts. Okay, let me show you something that happened on the daily right here. Okay, so you could see GBP. Let me go down to the 5 minute time frame. A smaller time frame when it comes to entry, because picking a POI on premium or discount has to do with entries, right? So now let's say you had this, and this was a break of structure. Let me pull this back to replay mode, right here. Ouch! This is forward time frame. I'm not currently using premium, so I can't do playback on that. So let me just do from here, okay? Let me do GU, because GBP USD has more structures than BJ, due to JPY being very weak these days. The structure is really messy, and also let me use GU instead. Okay, so let's say you were trying to understand this structure, right? Where would price be reversing from, and what would happen next? So let me put us on replay mode from right here. Okay, so now you understand that price is moving on a downtrend, and we had a break of structure right here, right? So this becomes the official high, but your low is led to be created because the previous lower low hasn't been cleared. But this is a weak low, right? This is a weak low. You're not supposed to trade from this because it's against the trend. And then we see it failed to clear out this high. Neither is it clearing out the swing high. So this is a very, very weak low. So now price comes back down. Okay, sorry, heads back into premium of this, because this would be a break of structure right here, right? And this would be on the downtrend. And then you're trying to look for a trade back down. What would be the first thing I would consider is that I would look for the liquidity, which I say this relative equal highs right here, which are liquidity, which price would be looking forward to grabbing within premium, because I told you price has to be moving into premium or discount of the range, right? But now since we're on a downtrend, I want to see price moving into premium before coming back down, where it's premium of the range. This is premium, right? Now, which liquidity am I seeing within premium, which I want price to clear? I'm saying this. What happens? Price comes into my POI, plays out liquidity after creating a relative equal highs, and is going back down. Now, why did I pick this liquidity on this POI above? Is because this is premium, right? So when you ask how do you pick a POI premium, you do what you're supposed to do, how you're being taught to using SMC. I'm trying to explain this to using SMC now, right? Because POI and premium all plays out with supply and demand and all. So you see this as a liquidity. You just wait for price to clear out that liquidity and probably do this a break, on the lower time frame for you to get an entry. That's how you get an entry from your POI. But then when it comes to picking your POI, that's what I'm explaining right now. Okay, so now price goes back down, creates a new break of structure, right? So now we have a new range. How do I pick the liquidity within this range? I see this is premium and this is discount, right? What I do is this right here, right? Internal range liquidity is because it's within the range. Now within this range, I see this is the internal highs. So which would be my POI? My POI would be from this right here. Okay, so anything above this will be an entry once these highs have been cleared out. Okay, because this is my target. This is what I want to see them clear. So what happens? Let's see what happens. Price clears out liquidity. So now I'm interested in the market because POI means point of interest. Now this point right here, I'm interested. I know that once price clears out this high, we become bullish. So price is not supposed to go above that high because this is a downtrend, right? So right here, right now, what I'm looking for is on the lower time frame. I can't have the replay mode on the 15-minute time frame, so I can show you what to expect back there. So let's go back to this and try to teach yourself from the daily. Okay, pardon with me, pardon with me. We'll just have to explain this from the daily. Okay, so if it comes to entry, you could backtest this by yourselves and try to see if price ever gave an entry on the lower time frame. Okay, then probably tomorrow we could explain how to get an entry from that. All right. So now back to the POI stuff. We see price clears at our high and then gave us an clear entry. So now we have a new range. Now since a new range has been formed, what do we see? Where is the liquidity within premium? This is the highs I'm expecting price to clear, right? So now I want to see price mitigating this supply zone, and if price should clear out this high, becomes a break of structure. I want to see price going bullish, right? Remember, this was a break of structure right here. Now, if you could check the range, you would have this. This was our highs within premium we're expecting price to clear. What did price do? Price came in, never cleared those, and it's going back down. So these highs are still liquidity. So once these highs are broken, you expect price to clear out this high because this is liquidity within premium of this range. Okay, until this is broken, then you expect price to go higher. Now, same thing again I do over on this range because structure is, practically repeating itself. So this was higher high, lower high, higher high, right? Which breaks structure right here. So now on this range, where do we see liquidity? This is the low we want to see price clearing out. So once price clears out this low, we want to see price clear out this low because within this range, this was the liquidity within the premium of this range, right? But price never cleared that out. So this liquidity is still open. So now we know these lows are liquidity. So this becomes our target. So we want to see price returning back down and clearing out these lows, right? This lows becomes liquidity. Now, what is the closest POI? to this liquidity. It would be within this demand zone, right? This would be where we would basically expect price to return to, using the basic concept of premium and discounts, higher highs and higher lows. Okay, so now with this already known, we know that this is still a bearish market. Okay, and if this is broken, we want to see price clearing out these highs. Okay, you guys know why I'm picking this, right? Because it's premium of this range, and it was never cleared out when price went back up. So this is liquidity. You guys are understanding me, right? This is based off his question. And then what did price do right here? We had another break of structure, right? We don't have any POI. All we know is the price has to clear out this high within premium. So this becomes a POI because if price goes above this high, this price becomes liquidate. In this structure becomes invalid, right? So this is the closest POI to our liquidity within premium. And what happens? Price trades and keeps doing ATB2 range. This is lower time frame range, but still price hasn't cleared out this liquidity yet. So you don't pay attention to this because price has never cleared out this liquidity. So that POI still stands. And what does price do? You see, price comes into our POI and gives the break of structure again. So what do? The same thing over and over again. We know this low becomes our new target, right? Because it's against the trend and fails to clear out the high. So this pick out a premium on discounts. Right there we could say this is premium. So which highs would be our target within premium? This would be liquidity high. What does price do? Okay, never cleared out the highs, but went back down to clear out our official target. Okay, now you know these highs are our liquidity, and you have no interest to pay attention to this. When price starts coming back up, price will probably give a reaction to this, even if it's going to clear out the highs. So I hope that has cleared your question, and then you have a little knowledge of this. You could backtest this yourself. Please don't just believe because you're being showed right here, right now, means you're going to be understanding this all by yourself. You have to do some backtesting on your own, and do this over and over again and see how it plays out. Okay, because that's what you have to do. You have to pick out the relative equal highs within premium, and then pick the liquidity POI above those liquidity. And all you have to do is wait for price to give a reaction and go to the lower time frame and see if you see a bearish scenario, because this is a bearish market. Okay, if you see a bearish scenario happening after price clears out this high, and then you see a bearish scenario happening on this POI, it's an entry target. It's an entry opportunity. If you were asked why did you enter on that, it's simple. This is premium. Okay, this is premium of this range, and we had the break of structure right here. So this was the liquidity target for this range. And once this high is broken, this setup becomes invalidated. So price can go above this high, and this would be the closest supply to it. What happens? Price gave a reaction, came back down. So that's how you pick your POI. When do you have any contribution to make based on this question? Why you do the roundup? For me, basically, and I don't know for Wena, if he has anything to share based on how he picks his own POIs.
Yeah, sure. I'll just share my screen. Jay, can you confirm that is it showing?
Yes, I've seen it
All right, perfect. Guys, for me, like, I have some basic rules for my point of interest. Like, I have like 3 to 4 basic rules to, differentiate a strong point of interest from low probability point of interest. So, let me just illustrate that from theoretical perspective first, and then we'll dive that in the practical scenarios as well. So basically, like as Jay mentioned, that we first have a trading range. Like we definitely want to sell from the premium range, and we definitely want to buy from the discount range. All right. So we have this range. Let me just remove this and this. All right. So yeah, we have this region, this range right here. So we have this premium, this discount range. So zooming this, like obviously this is an impulsive wave, but we do have some short waves within that as well. So let me just illustrate that. So price was pushing downside. All right, price did some sort of that, and that we have this, and we have pullback. So what my basic rules for an auto block, or probably mostly an auto block, what I choose is like I previously used to choose imbalance, but over time I'm more like choosing auto blocks. So there are 3 basic rules for me to choose a strong POI. Number one is like the wave, the wave from where the order block is formed should have grab liquidity. Like if you observe right here, this was a weak high. All right, so price went up, all right, and pushed down. So this basically was a breakout, as I previously mentioned, that sudden immediate retracement back within the range is definitely a liquidity grab. So I would consider that as a liquidity grab. All right, so the first thing first, we have a liquidity grab. All right. So moving down to the second one, we should have a break of structure, a micro break of structure. Like definitely we were trading bigger macro time frame. Like we were looking for this impulsive wave, and we were looking for pullback within this region and pushing down. But definitely within this higher time frame range, within this simple impulse wave, we have some micro structures as well. So in microstructure, let me just remove this one. So within these microstructures, we should have a break of structure as well, like a recent one. All right. So we have this break of structure. All right. So first rule met, we have a liquidity grab right here. All right. The second one, we have a break of structure. All right. 2 rules met. The third one, we should have a good momentum. All right. A good momentum means like the price somewhere in between should have left favorable gaps, or maybe not, like it should have a momentum. All right, momentum, a proper momentum within that. All right, so we have 3 rules met. One is liquidity hunt, second is break of structure, third one is a good momentum. All right, so moving down to my last and fourth point is a point of inducement, as Jay mentioned. Like he never choose the recent high, which is in the premium. Like he always consider that as a liquidity. So do I. So I actually use that as that high as a liquidity and inducement. Inducement in a sense, like if price comes back in here, it might show a little bit of reaction. A reaction to trap the early sellers. Like if the price shows some reaction and give cookie to the early sellers, they would try to jump in from here. But little they know that this is just merely a trap to induce early sellers in the market. So I will look for a reaction such as this inducement, and I would wait for price to comes back in the in this point, and then I would be looking to look up for short. So that is simply my 4 rules. Like I almost try to keep my things as rule based as possible. So these are my 4 rules for a strong POI, how to differentiate that from weaker POI. All right. So let's just dive in. We have some mess here. How we'll just go with your cat. All right. So, oh my God, we'll just go with the USD basic one, where we have been trying to look up for stuff previously. All right. So in here, let me just find a pure example. Like obviously, I'm not trading every simple move within this region, but I'll be looking for a good move. So the first thing we would have to, this definitely is a good POI. Like this POI stop hunted these equal highs, all right, relative equal highs, and this was a break of structure, all right. This is a macro, like I'm considering that as a macro POI. So that is definitely a POI for me, all right. That is POI for me. Like the first rule, it it grabbed liquidity right here, all right. The second one, it broke structure. The third one, it left fair value gap right there. That this was a quite a good momentous move. The third one is, it's inducing sellers from this region right here. Obviously, I can't be precise every time, but this is a point where the early sellers are trying to get in. So definitely, if price pushes upside, I would be looking to get in shorts. But that is something which has to be doing near future. But we'll see. I'll try to explain like if I have anything else. So and we have a good thing right here. So uh, look at this region right here, all right. So we had this faker stuff like that, right. The first thing, we have a liquidity grab, all right. The second one, we have a break of structure, all right. So number one rule, Matt, we have a liquidity grab, all right. Or you can even maybe you can do something like that fake out thing, a fake out, it can be either way. Like it just should be a liquidity grab. It could be a trend and fake out, it could be a a old high chicken out, or it could be a consolidation and stuff like that. So it could be any sort of. So we have this weak high right here. The price took it down. We have this trend line fake out, and the price pushed it down. So we have rule number one met. We have a liquidity grab. We have a break of structure. So moving down, third thing, we have some fair value gap, and you can see that we have a good amount of momentum. All right. So we have a good amount of momentum. So we have our three rules met. So moving down to the last rule, do we have an inducement? I believe yes. Here, do we have an inducement? So just see right here that the price has a bit of a cookie for the early sellers, I would say, but it's still a bit of inducement. I would consider that as an inducement. So what price it was is let me just draw the premium and discount region as well. All right. So yeah. So the price did some sort of inducement. It went up. It's having this order block, and we saw a nice push to the downside. So similarly, let me just have a look further back, and I'll see if I can show you some examples. All right. So all right. Uh, I really want a good momentum. So I definitely would have no, yeah, I definitely would have be looking for this one, but definitely it was stopped out. but we have to keep things realistic as possible. Like I just can't show you every trade that would have been a profitable one. But yeah, that was a liquidity grab. All right, that was a break of structure. All right, a good momentum and some inducement. You can consider that this stuff this stuff right here as inducement, more like like it's inducing some sellers from this trend line. Like the market is inducing sellers in the form of trend line, so definitely we can call this as inducement. So I would be looking for, I would have been looking for short position from it, but definitely the price took it out, and it went according to directional bias. But yeah, it's uh, so anything else? I just can't point out my POIs in the past. I'm not sure why. Let's just try any other pair. Your CHF. All right. All right. So here's a perfect example, I guess. So we had this liquidity grab right here. All right. Roll number one. We have a break of structure. All right. The next thing, rule number two, we have a good momentum, leaving some imbalance right here. All right, three rules met. So similarly, we're talking about inducement. So we are, inducing sellers in the form of, you know, in the form of trend line. All right. So another sort of inducement is, if you're in the channel, you would have read his PDF regarding PU3. That was his name. So that was fair value gap. So you know the way I remember that the price might react from fair value gap as a sort of inducement, and the next thing we would be expecting is the price to tap within the original order block, or stuff like that, and we can see a push to the downside. So yeah, we can consider this as inducement. The fair value gap reaction from fair value gap, like it would react from this fair value gap, and the people would think that the price is reacting from this fair value gap, but in reality it's just going to the upside. So let me just see how if I can see any further. We have no. This was a clear high break inducement, but price never tried to come back in this sort of. Maybe it did. Watch this. Look at this. How beautiful. So it's a long term. I do not really play that, but just look at how this thing played out. A liquidity grab, a break of structure, a good amount of failure gap, and all these equal highs right here. Inducement. So what price did was, let me just grab the horizontal line. This was the order block, and see how precise the price tap within this, and we saw a nice push to the downside. So yeah, that's pretty much how I look at my strong POIs, and it actually, like as I mentioned previously, like it's not something fixed, but I'm trying to express some fixed rules, but in reality it's not that simple. Like as I mentioned, like trading is an art, and you have to be flexible with everything you are seeing. Like you just can't rely on fixed stuff. But if it helps you, then definitely you can do so. But sometimes you have to move aside to your rules, and you have to be flexible with what price is showing you. So yeah, that's simply it. That's how I identify my POIs, and yeah, that's just my 4 rules of identifying that. So yeah, any further questions, guys?
For those of you who found this a little bit complicated, you're welcome, guy. You're welcome, bro. You should understand that this is the first day of the webinar, okay? What we basically did today was a summary of everything when it comes to technical analysis, all right? Tomorrow, we'll be paying more attention to psychology, all right? And sharing our experience so far when it comes to trading. Because a lot of people feel like the journey of trading is a personal stuff when it starts to get to the hard part. It feels like, trading is after you and you're alone. But um, unknowingly to you, they're not hunting anyone, or they're just using the same methods, and we are all human. So in the same process, we just fall for the same traps. And since it's being tested by brains, these guys are smart, so it affects us psychologically and makes with our brain. Okay, so that makes us to feel like they're after you, or they don't want you to succeed or stuff like that. Sorry about that. Sorry about that. On the third day, what we'll be doing basically would be showing you all this in an arranged form. Okay, trying to let you in basically on what you're supposed to do in the advanced way when it comes to trading. So to me, general, I told everyone in my mentorship that in trading, the first stage has to be your psychology. All right, your psychology has to be uh, the best part of trading. Okay, so it has to be in the right direction. And then secondly, you have to understand what technical analysis is, what you're after, what you're looking at, what do you want to see. And final of all, you have to understand that you have to be a storyline to trading. Okay, you have to be the storyline to your trading. You have to know what you're looking for. You have to know why you're looking for that. You have to play smart. In general, you have to just play smart. That would be the advanced section, which we would be having on the last day. How to teach you how to trade as, you know, a smart money trader, which is basically having the knowledge of an institutional trader. Instead of thinking of you being hunted, you think like the one who is hunting. Okay, you become the predator instead of the prey. So instead of looking at the market and trying to look for other blocks to trade for, instead you're looking at the market and trying to find liquidity or traders POI. So you could liquidate them. I don't know if I'm making any sense to anyone, but along the way, I guess I would. Okay, so probably on the third day you would understand this, because this is one of the reasons why a lot of people make mistake when it comes to picking the right POI, because basically they don't really know what they're after. Okay, is the POI supposed to be just a POI where you take a trade from and become profitable, or is it supposed to be there to induce you to draw your attention so you get liquidated or manipulated by the smart money traders? So uh, a trader, you become instead of you being a retail trader, sorry, you become an institutional trader. Instead of you looking for another block, you're looking for an obvious part of trading where you could liquidate traders. For example, uh, let's say this range was back here, and you wanted to trade this market right now. If I wanted to trade this market in my full credentials and full approval, all I taught you guys from my end today was just the basic concept of trading. Okay, basic concept of how I trade in general. Right. First of all, I understand that this is premium, this is discount. This was a break of structure, right? So once this is broken, I pay attention to this. First of all, this would be my first focus, because until this high is broken, price has no reason to go back up. Okay, and then if we should be going back down, back up to this point of interest within this premium, I don't see price reacting from this just at the 50% because everyone will be in profit. So I want to see multiple stop hunts just within this POY. Okay, so I want to see multiple stop hunts from within this POY, discouraging traders and making them feel like price wants to go back up. You see, that's me thinking like an institutional trader right now. I'm not picking this other block because it's another block. I'm picking this other block because it's within premium and we have this adjustment below it. Now, this I call this an adjustment because it's another block which is obvious also, right? It's an obvious other block which everyone is saying. Okay, and then you see this is the closest to premium, to the stream within premium. This is also within premium, which has an adjustment below it. So we're going to see reaction from this, but I don't expect this to hold because we still have an open POI above it. So this becomes a low probability POI, which we're expecting price to react from. Probably play ping pong with this. Okay, but then I understand that price would be doing the right thing, or the market makers would be doing the right thing when it comes to liquidating because they don't want us to win. They're not out here to make you win. So that's why you become a predator. You understand that this is a fair value gap, an imbalance, which is in the trade. I'll play to you the importance of an imbalance and why an imbalance is important. Okay, so we have this imbalance just above our POI, right? But then we don't have any imbalance within this POI. This has already been filled up, right? So this makes this a more um, open POI. And on the second, on the other range, we still have this other block still open because this are relatively equal highs, which we have the 50% of this week order block still open right here. So that makes this POI a low probability to me because we still have other POIs just above it. But then I will still wait for price to react from within it before taking a trade because if you trade without reaction, money, right? You have to always wait for reactions from the market before you take any trade. And what do we see? Price goes back. Let me just okay. So price goes back up, breaks structure right here, and then we have this. This is the current structure of the market, all right? And then we don't expect price to break this unless price is about to go back down. So what do we have? I can't. Let me go down to the forward time frame. I should. I can use the replay mode on the forward time frame. But I'll try to register my premium by tomorrow before, you know, you could start the next day's section. All right. So let me go back to this. Put it back on replay mode. We were right here. Okay. So now I don't expect price to return back down until we probably mitigated this, right? No, now remember this is an obvious order block, which every trader will be looking to take a trade from the 50% of this, right? So you see, now I'm about to build a mindset, or you could say an idea of being a smart money trader. Now I'm not thinking of this other block as a POI, but as a trap to trap every other person in the market. So now if I'm a predator and I'm supposed to be hunting this market, let's say we're working for the institutions right now. Let's say you're trading for the banks and you were told to liquidate traders using a 500 lot size or 1,000 lot size. What would you do in this scenario? That's how you think like a smart money trader. What would you do? Would you sell the market from here and put all of them in profit instead of making them lose the money, or manipulate them within this zone? Do a little bit of ranging, then do a stop hunt into this POI, then head back down. Now, if we do move into the POI, it's still another block. So they will be looking to trade from it also. But most of them will be waiting on the 50% of this other block, which would be this. So do we react only 50%, or do we disrespect this? Now we don't have enough money to break this high because we're not the only institutional traders trading within this market. So this is a protected high, and we have to go back down from within this zone. So what's the best manipulation that could be done within this POI? Would be multiple stop hunts on the lower time frame, probably 5 minutes or the 15 minute, because they know retail traders love the lower time frame. So they would pay attention to manipulating that, but on the daily, let it still make sense. Okay, what happens? You see, they suspect this, went back up into this POI. Now, for the full day, you could see how the candle reacted, and then The next day went back up, mitigated that. Probably after a break of structure, and price went back for a proper mitigation. So if I was to be in this trade, I wouldn't be in this trade from here. Rather, I would be in this trade from here because that would be the retest and expecting price to go back down using this as my stop right there. And then expect price to go back down to take out the week low, which would be this. Okay, so what do we have? We have a break of structure and price is returning back into this POI. What do we have right here? We have this hidden order block, which has one I told you guys at the opening and the other at the 50%. Now let me do this. So what do we expect from price? Price mitigated the opening of the block and break structure back here. If I was to pick a POI, that would be now within the 50% because price has mitigated the opening, right? So what does price do? You see, mitigated the 50% POI at the hidden of the block, and then this would have been a snipe even from the daily time frame without going down to the 5 minutes or the 30-minute time frame. This is how you pick a POI, and this is how you do your full credentials. Now I'm teaching you everything I do when it comes to my trading, not just the basic concepts. Okay, this might be complicated to you right now, but probably on the third day it should be more clear to you. And now let me be honest: if I was to be in this trade, I wouldn't be in this trade from the 50% because I would wait for a reaction. So probably I would be within this zone and having this as my stop loss. Having this high as my stop loss, okay, and then expect price to ride back down to clear out the week low. Okay, so now I would have two entries, and this is how you take your swing direction, and then your POI is all the same thing. And then price goes back down to hit your TP. So on the third day, probably after giving you the mindset of a the mindset of a smart money trader, we're also going to be giving you the idea of a smart money trader also. Okay, how to use the order block, how to expect reaction, and how to wait for reactions. All right. So I want to officially thank you all for joining this section. Thank you all for coming into the Zoom today, and thank you all for joining us. And we hope you put this knowledge to use and great use when it comes to trading. And we hope you jot down a lot of things from this section which would help you out in your trading in general. And we'll see you in tomorrow's section. According to Rena, we're going to be doing a little bit of editing when it comes to the recording of this section, and we'll be sending that out to you guys once it's ready. All right, every information the last day, and the channel will be left for 4 to 5 days, so you guys get deleted. Okay. So for now, feel free. If you have any questions, you could also come to my DM or come to Rena DM and give him the questions while you wait. All right. So thank you all for joining. Rena, do you have any other thing to say before we round up this section? I have just a few minutes to go.
Isaiah, actually, we haven't actually decided tomorrow timing yet. We'll just update you, like just we did today. Maybe like 7 hours before, 8 hours before. We'll just do that tomorrow as well.
All right. So thank you all for coming and thank you all for joining the webinar. We'll see you all tomorrow. Okay. Do have a nice day. Good night, good morning, good evening, whichever time frame it is in your possible directions.
See you
All right.
guys.
See
See you
you all
guys.
tomorrow.